Canada is in a race to get more homes built as the country faces a major housing crunch. But a new report suggests that one province may be lagging badly behind the others. According to RBC, nationwide home construction is actually at a 4-year high. But in Ontario, there has been a steep drop in housing starts since last year, especially in the Greater Toronto Area, one of the regions in most dire need of housing. So what's going on? We are joined by the report's author, Robert Hogue, RBC's assistant chief economist. Welcome to the show. Now, Mr. Hogue, there is a belief that housing starts are lagging across the country, but your report says, for the most part, that's not the case. Why is there this discrepancy?
Well, there's some very significant regional differences. In most of Canada, housing starts have been pretty strong so far this year. That's on the heels of very strong starts over the past 4 years. However, housing starts in Ontario have been very soft and have been softening. And in fact, they've reached the lowest level in 10 years on a 6 months annual average basis. And in BC as well, things are a little bit soft there as well, not quite as soft as they are in Ontario. So the overall picture still looks fairly robust in terms of, from a historical perspective, still probably not sufficient to meet all the demand that's out there, but really Ontario is really lagging the rest of Canada on that basis.
I think many would find that surprising, especially since we hear from the Premier that there's all these cranes in the air in Toronto, for example, and across the province. So what is going on in Ontario and, as you said, to a lesser extent in British Columbia?
Right. Well, let's make a distinction here. So yes, there are many cranes in the skyline. They're working on existing projects. What we're talking about is new housing, so housing starts. And those have slowed down quite significantly. Well, however, the number of homes under construction is still very robust in the Toronto area. The problem with new starts is that for developers, they're having a very hard time selling new projects because they can only sell at certain price points that currently the demand is just not there. Investors are not interested in current price points. At the time where in the existing market, especially in the condo market in the GTA, buyers can find readily available units and sometimes cheaper. So that is really kind of slowing down the launch of new projects and indeed slowing down the actual housing starts. So
what needs to happen to change this trajectory?
Right. Well, if you talk to developers, they would love to see lower costs. I mean, there are certain things they can't really change that much. The land prices are coming down to a certain extent, but that's not easy to do. Cost of materials, labors, it's more or less fixed. There might be a little bit of leeway there to get them down, but really it's on all the charges, like governmental related charges, whether development charges or other fees, the process to get projects approved that are really kind of weighing. So if they can get some improvement on that front, costs coming down, that will help kind of lower price points and entice more buyers to get in the market, particularly for investors, for example, condo investors.
And if it's not turned around, particularly if we're talking about the country's most populous province, or provinces, if you include BC, what does this all mean for the housing affordability crisis?
Right. In the very near term, what we have is, there's lots, like I said, there's lots of condos available in the GTA or even Vancouver market right now, in the existing market. So what we're talking about housing starts and their impact on housing affordability is not immediate. It will. The risk is that it might push home costs higher in the longer run once the current inventory of homes gets absorbed by the market, once demographic demand, like when population starts growing faster a few years down the road. That's kind of the nexus in time that we worry about. This is when you might see essentially no new housing completed at that time in those markets when demand is going to pick up again. And this is where the improvement that we've seen over the past year in terms of housing affordability that is likely to continue a little bit over the near term. but might start to get reversed at that point. That's the big question mark, the big worry for us at this stage.
I see. Now, you mentioned, and your report mentions, that there's this larger supply of readily available homes in Ontario, and that actually is a problem and not necessarily having a positive effect on housing affordability. But doesn't having that readily supply mean that it's a buyer's market and prices should be coming down?
And they are. It is having an effect on the market. And we've seen prices, condo prices in particular, but other prices for other types of housing as well in the GTA coming down, in Vancouver to a certain extent as well. So the current situation is contributing to an improvement in affordability. Mind you, the starting point was the worst ever. So over the past year, lower interest rate plus drops in home prices, moderate ones, but nonetheless drops in prices help affordability. In our view, that's likely to continue a little bit through the rest of this year, maybe early next year. Again, the bigger worry is more down the road in a few years' time, when this lull in new starts today will materialize in lower completions, therefore weaker growth in the housing stock at the time when demand is likely to pick up, like from a demographics perspective.
Yeah, so what you've described is sort of almost like a bottleneck that will have repercussions down the road. And I wonder what that means for the federal government's plan to double construction starts to 500,000 homes a year. Is that even conceivable?
Well, it would certainly will be an uphill battle, especially more specifically in Ontario in that context, because for a lot of that increase from a federal perspective has to come from Ontario, one, but two, also from the private sector. And this is where, in the condo segment, for example, more specifically, this is where things are jammed right now. It's in a stalemate. Buyers, we know there's a lot of pent-up demand, but that pent-up demand is going to get triggered when price points would come down low enough. However, developers and builders right now are stuck. They can't really. Now they're dealing with very high costs and costs that have risen quite significantly in recent years, and so they're not able to meet those price points. So really, that's kind of to get the federal government or any government plans to get that to unlock this. It's going to be an uphill battle.
Okay, well, thank you very much for your time today. Robert Hogue is RBC's Assistant Chief Economist.